Good afternoon, everyone. Welcome to the daily market update show. And we are looking at QQQ, Sp500, as well as Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. So we'll be looking at support and resistance level, as well as what's the most likely scenario where the price is going to be heading. And we look at price action, because price action is the most key. And before we start, we're going to look at a couple of fundamental datas that we got this week and what potentially made the market more bullish. So yesterday we got JOLTS drop openings and came in a little bit softer than expected. So that gave us the fuel to potentially say that the Fed may be done with their rate hikes. And today we also got a little bit of a softer GDP as well than expected. So when we look at the data for rate hikes, probabilities, remember last week I was talking about where this was actually priced in for another hike on November. And I said that anything could ship right away very quickly. If we get a CPI data that's a little bit softer, or any other data that's softer. So those two data actually came in. And I saw this went from 49% now into 41%. So now the probability is pricing in for 53% of a hold. So instead of another hike, we're actually getting hold for the rest of the year. So that made market a little bit more bullish in the last 2 days. Hence, we got our trend change. So it was fundamental and technical at the same time. So remember, I talked about where this big enough move where once the Jackson hold fear was alleviated, there's no more uncertainty left. And we get the drop JOLTS opening here. We broke above this high, which confirms a daily uptrend. So that's a technical plus on the bull side. And you get a fundamental plus on the bull side with the JOLTS as well at the same time. And we broke above this high and got our daily uptrend ever since this July weakness. So now where it's going to be heading? Well, it's looking like it's going to be a monthly bull flag at this moment, and which we zoom out into the monthly time frame, and we take a look here. So what we do is measure from the very bottom of the move. So that'll be the move from March to the top of the move. And currently we haven't retraced 38.2% yet. That means we're still in the bear bull flag territory. As long as the price chops around this zone. And then we break above it, that's a confirmed bull flag. So at the moment we are in the zone, bull flag zone, and we bounced very significantly off already. So the most likely scenario is a bull flag, monthly bull flag into end of the year. So August candle is about to close out. So this current candle right here is the August candle because each month is only one candle. So it takes a while. And we could actually pull back more in September because September is relatively weaker seasonality over the years. October is a little bit weak as well, but it just depends on the year. So let's say the September candle, we pull back, right? That's no big red flag for me. And then October, we bounce, pull back a little bit. Let's say we close over here. November, let's say we tighten up, right? We tighten up in this bull flag. We get more tight in November, and then we bounce at the end of November. Next thing we know, boom, break out of this bull flag into end of November, December, and run into end of the year. And when we break above July's high, then that's a confirmed bull flag. And we're probably going to test all-time highs if that happens into end of the year. So this is the potential scenario that I'll be watching, see how it ends up playing out. Obviously, these candles take a long time to form, so we need more data at the moment. But as of now, all the data that we have currently, that we bounce off of, still above 0.382, and we bounced already 6% from that point. And as well, we are pretty close to the high of the flag at the same time. So the most probable scenario is that we may head higher at this moment. But like I said, those even if we just pull back for the next 2 months and tighten up, that could be a possibility as well, right? So get some sideways action. We'll see what the market will tell us. And if that happens, we'll be able to see it on the daily, where it would look like a tiny range, big move down, big move up. And then the next move would be within the prior move. So you can see there's a big move, right? And this bounce is within the prior move. So the drop is also going to be within the prior move. So it'll likely bounce here because there's strong support here. And then when we bounce, likely be within the prior move like that. So that'll give us those monthly tiny range candles as well. And then still in the bull flag territory if this happens, right? Even if we drop, right? That's 5% drop. That's pretty significant for the market overall. So we make it that, let's say into September weakness, we get this kind of drop, another 5% in the bounce. Tighten up, bull flag, right? Or tighten up, break, negate the bull flag, bear break, right? Anything could happen here. So, but as of now, I don't see any significant macro news at the moment that none of us know. You know, like we most market participants have already known that recession may be coming up later in the year or maybe early next year. We've been talking about this for like 2 years. It's right. The market participants has been expecting a recession for over 2 years, and we still haven't gone yet. So there's nothing like in the horizon where that we would be seeing a significant market crash. Right, that's over 10% or 20% at the moment. Obviously, there could be black swan events. None of us will be able to predict that. So, but as of now, we take a look at the price action, and it's currently in a daily uptrend. Follow the trend, and you guys know, remember I talked about where we had a daily uptrend here in the summer breakout, and that all we had to do was follow the trend, and we had a 23% bounce. And then when we had a daily downtrend over here confirm, all we had to do was follow the trend as well. And another, let's say you missed your short, right? You're trying to nail the top. You missed your short from the top to that daily downtrend confirm. You missed 3% only, right? From the top of this move to where the daily downtrend confirm on this Wednesday candle, you missed 3%. So you play leverage SQQQ. Okay, so you missed 10%, right? Or 9%. And then you got in here right after the downtrend confirmed. Guess what? You'd have made another 5.5%. And then if you played SQQQ, which is a 3x leverage over the short side, you would have made close to 16.5%. And you would have been stress free because you wouldn't be trying to nail the top every time. You'll say you try to nail the top here, you try to nail the top here, you try to nail the top here. You've gone stop out this entire way. Versus you just wait for that trend change on the daily, then get in. Then you made another 16.5%. And on this way up, you just followed the uptrend. 0 fake outs, and you made the whole move. That's why trend changes are very important, because it shows us who's being serious about the price action at the moment and who's currently in control, bears or the bulls. And I also always talk about this where markets are designed to go up in the long term if there's no like anything serious going on in the market. So preferably, we would like to play the long side overall. But as a day trader, we can always play both sides. But as an investor, you can have your accounts where you have investment accounts and your day trading account being separate. And obviously, investment accounts, nobody really holds shorts for years, right? I don't know anyone who's like, oh, I'm gonna buy short and I hold it for 5-6 years, and because you'll never win. Because over long term, 5 to 10 years, market always goes up. All right, so let's take a look at back to SPY. So let's take a look at SPY is already testing close to its prior highs already. So let's see here. So SPY is at 380 for QQQ zone. So SPY is testing this resistance currently. And slight pullback, but 0 red flags at the moment. So SPY is testing right here. So we zoom in to the hourly and see if there's any red flags. And there's absolutely 0, because this looks like a 4-hour bull flag to me. Let's see here. Yeah, so you can see SPY just tightening up, making a higher low every time we dip, meaning the low of the dip is higher than the prior low. So tomorrow, we potentially get another breakout. If we break above 451.5, we likely get a breakout as well. And short-term traders, for you guys, very clear sign on the hourly 12 EMA recently. See bounce here, pretty much exactly held it pretty well. Bounce here again. Today, same thing. Bounced multiple times. So if you're a short-term trader and you're holding SPY, as long as the hourly 12 EMA is intact, momentum is in absolute bull favor. Obviously, it doesn't mean if we break the 12 EMA, it's game over for the bulls. It just means that this current recent momentum is slowing down a bit if we do break the 12 EMA. And we zoom out. If the hourly breaks, we zoom out to the longer term time frame, see where he wants to go. Because SPY has a lot of space to form that daily higher low now. Just like where we set the pivot here, higher low, meaning this low is higher than this low, and form that daily uptrend right there. But this move is just as large, or even if we pull back like another 1% bounce here, we're still, this low is higher than this prior pivot's low. So currently, daily uptrend is intact, and it will continue to be intact as long as bulls hold above this prior pivot on Friday's pivot 435. Then it will continue likely trending up. And next thing we know, we're probably testing this high. So we'll see if the September weakness actually comes in or not. Everybody's talking about it. So, I mean, October, there's a slight weakness as well. I mean, we got this drop. Is normal for QQQ and Sp500, 5 to 10% drops every year. It occurs. You can see even back here, all this. This was on bull market run, right? This drop. They were all close to 5 to 10%. Very normal for these pullbacks. And we need these pullbacks to form supports along the way as well. So makes the foundation of the charts more stable. All right, let's take a look at Tesla. Slightly weaker today than QQQ, but no red flags for me because we ran 8% yesterday. So today a little bit of cooling is pretty normal. And now we got to see if after consolidation, so not consolidation, after taking a chill a little bit, will Tesla pick back up? It bounced off of this 252 support. And because of this zone where there's a lot of volume traded, there could be many bag holders here that wants to sell. When I say bag holders, but people that wants to sell break even. So hence, when we come up to this zone, there's gonna be a little bit of selling pressure here. But after if we consolidate here and just like drop around, and QQQ is also taking a break as well, and we don't break below this 252. And then once QQQ finishes taking its break and the supply of this zone where all the sellers that wants to break even finishes selling, right? QQQ makes the next move up. Tesla is also gonna make its next move up. And you guys know where I talked about yesterday where I want to see the NASDAQ break this double top to form its daily uptrend as well while QQQ did that. So that's exactly what we got. You can see. Let me zoom in for you guys. See this double top right here? We closed exactly double top yesterday. And NASDAQ hasn't broken this daily uptrend. So NASDAQ is just QQQ's future chart. Wait, there's more price action on it. And so when we zoom in, it's 154.14. So in the morning, we're below it. So when we retested here, so we're below it over here, and we came back, we were above it, we broke out of it. So daily uptrend confirmed, and sell off, and then bulls play defense here. So when we bounce off of that, then it's pretty clear. Sign bulls are wanting to defend that daily zone. And then we just head up into the end of the day. A pretty sideways day, but definitely bulls favor because of such a huge move yesterday, and bulls are able to hold even higher. Good sign for the bulls. And Tesla, we have a lot of room to work with, even if we dip down. Excuse me. So for the daily uptrend, it's currently in a daily uptrend, and even if we pull back a bunch, we still have a lot of room to continuation to set that higher low each time we pull back. Just like, let's see here. Did we set? No, we didn't set a lot. So this is a higher low right there set, but the rest of this is also higher low being set. See each move here. When you pull back, it's also always a higher low being set. So that is what I want to see on the pullbacks where there's buyers wanting to get in and setting higher lows each time we go up. Higher low every time. So yeah, no huge red flags today. Just chilling a little bit, cooling off a bit after this significant run from yesterday. We'll see tomorrow if it's gains back some strength or not. And depending on QQQ as well, QQQ will likely need a little bit of a break after such a significant move. Let's see, 5.2% in 4 days. Who knows? It can keep going. But as of now, no signs of topping out yet. So yeah, because even on the short-term time frame, bears aren't even in control. So, but it's very clear resistance today, quadruple top today. So that's where the bears are going to play defense tomorrow, same level. So you get all this top, but we made a higher low every time. So yeah, because now I would say bulls are in full control, and bears are just trying to play a little bit of defense today. That's all. All right. All right, Nvidia. So Nvidia yesterday I talked about where there's 0 red flags on its structure of its charts, even after 2 days of the pullback after earnings. So bulls have really nothing to worry about, to be honest. It's a very volatile name. It makes sense when we have big pullbacks and big bounces, and essentially that's what makes this Nvidia and Tesla so much fun to day trade, and because there's such a big moves on either sides, right? That's pretty much day trader's dream. And we talked about where this once this double bottom held, when we had that 2-day pullback, we pretty much say that it's game over for bears because it wasn't like Nvidia had a bad earnings and they guided bad or anything, right? They guided really well for next year, and they had a good earnings, pretty much blowout earnings, and they have a 25 billion buyback. So after 2 days of people wanting to take profit, fund managers are like, I've made enough money on Nvidia this entire year, which makes sense. The thing is up like, let's actually take a look at how much it's up. So if we measure from the bottom, obviously nobody gets in the bottom exactly, but just for reference, 356, 60%, right? So if a fund manager, it's like, I'm going to take profit, and for the end of the year, makes sense, right? After, especially, you want to take profit on a positive catalyst. Last thing you want to do is take profit on a negative catalyst when the gap's down 10%, right? So when it gaps out 10% at an all-time high level, right? Fund manager take profit for 2 days, makes perfect sense. The thing is, fundamentally, the structure wasn't damaged, and fundamentals were good. So if the technical side of the structure wasn't damaged and the fundamental news was good based on its earnings, then why should the stock drop even further after a 12% drop, right? And once we see that double bottom being playing defense from the bulls and a V-shaped 4% right after that defense, you guys know where I talk about relative strength, relative weakness, it flips. So we had relative weakness for 2 days. And then the relative weakness on the 3rd day morning touches the double bottom support, instantly flipped from relative weakness to strength. And we bounced close to 5%. And I remember this bounce from QQQ was only like 0.5% or 0.7 or something. and while Nvidia bounced 5%. So you can see that relative strength just turned on right after it hit the zone. And didn't look back. So similar here, and it's still going. So much it hit exactly $500 support. Everyone and their grandma knows the $500 support and psychological support is going to be tested today. And essentially, no big deal yet, just a little bit of pullback. And there's some news on Biden about restricting chips to Middle Eastern or something during the afternoon. And to my surprise, it was only a little bit of pullback. It's probably because the Nvidia demand is so high, they can't keep up with demand anyways. So who cares about as much as Middle Eastern's that restriction. So, but market reacts to the news, and we look at the price action to see how they react to the price action, and we digest it. So this is the price action that we got, and guess what? The hourly chart is not even damaged yet. So hourly uptrend intact. Even this pullback after a 2% pullback, we are still above the prior hourly pivot, and that means the uptrend is still intact on the hourly. As long as the hourly trend is intact, bears aren't going anywhere. Obviously, let's say we get a big red candle tomorrow. That's a different story. But as of now, zero signs of Nvidia having any bears. And we're actually close above the 12 EMA. You can see we've been bouncing off of it as well. Still looking line. So probably going to test 500 again tomorrow. So we get a double top rejection here. And maybe we'll get some a little bit more bear follow through, right? Come back down to 480. If it comes back down to 480, we get a double 500 rejection. Then I'm looking at a tightening range. So we go to a 4-hour. You guys know tightening ranges. So big move down. The next move up will be within the prior range. When we drop, it'll be within the prior range and potentially tightening as well. Which is perfectly fine after such a significant move on indices and some of these other big tech stocks. Sideways range would be ideal for the bulls. We actually favor the bulls because you're going sideways on the all-time highs range, meaning it might be consolidating for the next move up. So we'll see if we get any pullbacks, and we'll start to look at tightening range if we do get more significant pullbacks. Now, no signs of that yet. Apple been leading the market again. Wow. So if you told me Apple was just gonna V-shape all the way up to 188 when we drop back down here, I'd have been like, okay, yeah, I wouldn't bet my house on it. But I did say that after we broke this sideways 2 weeks range, I remember making this video before we broke this range. I said that very likely we're gonna break this range to the downside and then V-shape, and we did. So obviously, I didn't anticipate this kind of V-shape. But I was thinking more so like a V-shape back up to this zone and then potentially chop around here and then see where it goes. It looks like a V-shape. That's the top of the zone. Check. And on Monday, I said we were so close to this daily uptrend. Apple breaks first. QQ is probably going to break this daily uptrend as well. And that's what we did. Apple carried the market on Tuesday. You can check that Monday video out. We're only 0.5% away. That's why we do these 7 mega cap tech stocks to show us where QQ is going to be heading, because we can get a lot of information on just who's going to be breaking bear, who's going to be breaking bull on these 7 mega cap techs. And if 6 out of 7 of them are going to break bull, we are probably going to likely break bull on QQ. And so I think on Monday I was talking about there's 5 out of 7 that was on the team bull, and I think Amazon was on bear side. And then I said the most likely scenario is that we will probably break above, because the probability of 5 out of 7 is definitely more than 2 out of 7. And so essentially, though, what we did, we confirmed the daily uptrend on both Apple and QQQ. And so now what are we looking at now? Pretty much filling the gap. We're in the gap, and we closed at the high of this day. So the next level would be, let's move this one up a little bit. Actually, this is a zone. Next level would be looking at 190 and this 190 filling the gap zone resistance. So we are, let's see, 1.7% away. So if we get another day like this, then bears are going to start shorting because we get 1, 2, 3, 4, 5 days of up, especially. Okay, so you guys make sure to look in the morning to see if we gap up. If tomorrow you wake up in the morning and you see QQQ gapped up and Apple is sitting right at 190.6 or 190 or whatever, 190, very close to here, 190, or just slightly right below it, right? Get ready to short, and especially, let's say we market open and the first candle just shot up and hit exactly this spot, short, and then put a stop above it, right? And very likely we're going to pull back to form that daily higher low because there's always pullbacks like this forming daily higher lows on the way up to form that structure. So after a 4-day move, if the 5-day gaps up, it will very likely pull back. Doesn't mean we're pulling back like that, right? Doesn't mean that's not what I mean. But like pulling back would be something coming down back here, 187, very normal. Anywhere within this range to this range, and we'll still be in a bull flag. Because let's say we up there tomorrow, top of this move, and we pull back all the way down to 185. It's still a daily bull flag. So it's very normal for it to pull back to there, even if the bulls are still in full control, because that will still be a daily bull flag. And we'll see. Yeah. Some days that we can look at tomorrow if we get a huge gap up tomorrow. But we'll see if overnight it's going to gap up or not. Amazon still the weakest. Still in daily downtrend, to my surprise. Daily downtrend come from right there, and now it's still in daily downtrend. This bounce is not big enough yet. We need to break about Thursday's high for it to be back to a neutral trend. Amazon's the only one that made a lower low here on that pivot. I mean, this low is lower than its low, prior low. Everyone else made a higher low. Everyone else was higher than this low. So even if Amazon breaks above this Thursday's high, it's not in a daily uptrend. It will just go to a daily neutral trend. But it's been so weak in the last 4 days. While QQQ is ripping, the whole market is ripping. This thing is only up 1%, flat, 1.33 flat. So not much going on in Amazon until we get this daily downtrend out of the way. So as you know, no signs of that yet. So yeah, I want to see bulls show up, but bears may be waiting for some market weakness. So if we get some QQQ weakness, Amazon's probably going to be the first one that rolls over the hardest. So we'll see if you're watching that or not. Sometimes we get weakness, and because Amazon's so weak, it shifts where it holds better, drops less than other people that have been gone up more. But it rarely happens, but we'll see if it does that. At the moment, no signs of that yet. We did bounce off of this prior support zone now. Prior resistance now acting as support, but it's not doing much. Just went sideways. But hourly trend is going to be our guy still, because hourly trend is intact, still in an uptrend on the hourly, but no offense going on here for the bulls. Yeah, so we're going to see bulls shows up soon. Google, good follow through. So yesterday broke out, and we did pull back a lot. I remember saying we pulled back a lot, but the thing that I liked is that we held this 133 zone for support, because remember we were talking about this channel where it's the channel that bulls need to get over. So when we retest it, when we come down to retest this 133, it needs to bounce. So we were looking at the 15-minute time frame yesterday when it came down to it, right over here. Bulls played defense and bounced. So that is a good sign. And got a little bit of continuation today. It's an inside bar, but it's good because we closed at the top of this zone. And we are coming back up to test this last boss. We'll see if all the mega cap techs are going to continue test these levels. Apple and Microsoft, of course, hit all-time highs earlier this year, but Google has not. So we'll see if they play anything catch up once this thing keeps going again. Yeah, surprising. It's very strong charts. And we zoom to the hourly. No signs of red flags. Hourly uptrend intact. And same thing, this quadruple top with QQQ, which is kind of like flagging. And we'll likely see if we break that tomorrow, or it's going to reject from this quadruple top level that we draw early on QQQ. All right, Microsoft. Microsoft still hasn't confirmed its daily uptrend as well. So we will see. Bottom of the move. Pivot is set higher than its prior low. Still waiting for that Thursday's high to break. Price we only up 0.2%, 1.2 today, while QQ was up close to 0.7. Let's see here, QQ was up 0.5. So slightly weakness. So pretty much Apple carried the market today, and Nvidia as well. So I want to see the other ones start playing catch up. Otherwise, if let's say Apple pulls back and Amazon and Microsoft doesn't, Amazon Microsoft pulls back as well, then Amazon and Microsoft never confirmed a daily uptrend, and now it's pulling back. The win for the bears. And if more of these mega cap tech stocks are shaping that up, right, we might see another pullback in September. So I want to see more of these mega cap tech stocks starting to confirm their daily uptrends. Google did, Nvidia did, Tesla did, Apple did, Amazon hasn't, and Microsoft hasn't. So it'll be the best if we get all of them in daily uptrend and gives more bulls the confidence to drive things higher overall. But no signs of bears yet, because we pretty much closed the high of its day, held this support zone, and no signs of pullbacks at the moment. We did test this 330 zone, so very normal. If we get over this 330, we're definitely coming up to test this Thursday's high. Yeah, we'll see. Meta, same thing. Very, very close to testing the daily uptrend. So we have 3 that hasn't confirmed yet out of the 4. Sorry, 3 out of the 7. But it's shaping up to potentially break it tomorrow, because we made a higher low, meaning this low is higher, and this 300 zone is a very strong key resistance. You can see we tried it over here very, very many times over here as well. And when you first come up to it with such a significant bounce, 8% bounce right into resistance. Very normal for it to reject. But what I want to see when it rejects is we don't pull back that much, and we still have a daily bull flag, and we bounce above the 12 EMA. You guys know I talk about 12 EMA when it rejects down here. When it was rejecting, when we're above it, I want to see it act as support. Our resistance now acting as support. Very good sign. So the most likely scenario tomorrow is we're going to retest this 300 again. And I want to see a break. I want to see a break above that so we can call it a daily uptrend confirmed. Break the 300, which coincide pretty much with Thursday's high, and give me that bull flag confirmation. We're still in the bull flag territory. Only retraces 23%. Yeah, that's what I want to see. Free bears, break below the 12 EMA, negate the bull flag, come down to 289. Then I'll be favoring you guys for a tightening range. If that happens, then we're looking like a tightening range to me for me. So we'll see if that happens. Right, that's all I got for you guys. Feel free to subscribe if you guys made it this far. Like and share is always appreciated. And if you guys have any comments below, if you guys have any questions, and I'll see you guys tomorrow for another update. And have a great rest of you guys' day.